Good morning, traders. Welcome to this live webinar with Admiral Markets. My name is Chris, and today's focus is going to be on Fibonacci and zigzags. So, looking forward to that. If you would like to follow Admiral Markets and myself, you can do that on Twitter, for instance, at Admiral Markets and at my name, Chris Forsick. So, I hope to see you there as a follower. Before we dive into today's topic, though, be aware that this webinar is shown to a global audience. Please take a look at admiralmarketsglobal.com, select your country of residence, and contact the appropriate entity to find out if this webinar is suitable for you and other details. Plus, by trading for exchange and global financial markets, this is considered high risk and may not be suitable for everyone. Please seek the advice of an independent financial advisor for more information on that. This webinar is not advice and is for informational and educational purposes only. Plus, by continuing watching this webinar, you agree with this disclaimer, and you are also aware of the risk involved when trading. A quick message before we take a look at the Fibonacci focus. All of the webinars are basically using discretionary technical analysis, and we're looking at a couple of steps that I want to explain so you have a bit better idea. If you are new in here in this webinar, what the focus is of the live trading focus. So first of all, we look at defining the trend of momentum. Momentum is the most important, in fact, but the trend, of course, also very important to establish what the bigger flow is, what direction do we see price trending, if at all. Depending on circumstances, I will be looking preferably to trade with the trend and momentum. I'll be looking for opportunities such as Fibonacci, what we'll be talking about today, and patterns to establish where there could be an opportunity to trade with that momentum. Thirdly, then I check if there are any filters, anything that could block a trade from materializing, like, for instance, pivot points. Then I decide what zone do I want to trade it. For instance, if it's an uptrend, then the 50 fib could be the catalyst for trading. That is my decision zone. I want price to move down to the 50 fib before I'm interested. But that does not have to be the trigger as well. The trigger could be, for instance, two bullish candles or candlestick pattern at the 50 fib, or even zooming into a lower time frame and putting a fib on a 5 or 50-minute chart, that is taking a smaller leg of the bounce at the bigger 50 fib. In any case, once I find a way to establish what price I need or want before trading it and with the trigger that I would like to see, then there's the importance of looking at reward to risk, basically measuring how much potential is there to the next important support or resistance level, and how much am I risking? So what is the reward to risk ratio? And if that looks sufficient, considering the type of entry. All right, with that said, let's take a quick look at the economic calendar and see what's going on. It seems to be empty, which is not correct. So let's try to refresh that. In the meantime, it seems not to be maybe properly working. So let me move on, and I'll try to find it on a different PC. Let's take a quick look at this heat map. All right, we see some small winners, but I guess especially big losses. Obviously, you probably are aware of that. The market has been hit hard, obviously, since Brexit. We've had some big losses, especially English banks. The stock indices have seen substantial downside. So we're going to take a look at that. We're going to take a look at a broader perspective on the market this morning. I think it's important. I don't do that necessarily each week, but considering the context, what we've seen, generally over the commodities, stock indices, oil, it could be good to take a look to get a more intermarket correlated view besides only the Forex market. All right, regarding the Forex market though, we see huge volatility, 2.5% up and down. Normally this is 1%. If you regularly look at the market heat map, you know that the boundaries are typically +1 and -1%. That's 2.5 times as much. And a lot of pairs that are close to that. So there's been a lot of movement. And the catalyst obviously was Brexit from Thursday to Friday as the results started to be known. and the market had huge movements. So we're going to dive into that in just a second. Now, regarding the news events, Scott helped me and said that there's a Draghi speaking very soon. So that's something to be indeed aware of. And that could always, of course, his words are important, are carefully analyzed. So that could always sway the market one way or another for at least a while. We have final GDP, I see, on the dollar as well in the New York session. There's an EU economic summit with current Prime Minister David Cameron still present, but tomorrow he is not. And as you probably know, he's also has announced his resignation, indicated that he will be probably leaving by October. All right, so yeah, there is a lot of well, basically, to summarize it all quickly, there's just a lot of financial and political turmoil at this point in the UK and in the EU, and that creates uncertainty. And uncertainty is something that business investment markets generally do not like. So I think that that's a reaction that we're seeing right now. However, of course, we don't know the impact on the long term. I think this is not a good, of course, as I said, it's not good for business. They don't know if they want to invest. I've read reports from, for instance, international companies waiting with investing in the UK because of Brexit, and I don't think that their opinion has changed after this result, right? So, in a couple of years, it could be tough. And what the long-term consequences is, that remains a bit uncertain, depends very much on UK leadership and how they negotiate a deal with EU and how the EU handles it as well. So those are too many question marks to really ponder about that. We've seen basically forecasts that are bearish for the UK and EU because of this in the long term. And that could certainly be so, but I don't think necessarily it's the only path. I think there are a lot of variables that still have to be decided, and that just remains a big question mark. But I think in the near term, those question marks definitely hang over as dark clouds over the markets because of the uncertainty. Very simple, uncertainty is something that business investment markets do not like, and there's a lot of uncertainty at this moment, right? No one can doubt that. If you're in favor or against, regardless of your opinion of the Brexit itself, that's just a consequence that we are facing right now. How those things, however, shape up, how the short term will impact the long term that's, I think, still too early. It's very fresh. It's also depends on so many things that are going to happen in the next weeks and next months. All right, so let's take a look. Obviously, we saw big movements, euro dollar as well, but primarily on the pound. I think from a technical point of view, we see that this 4-hour candle is very strong. It's a dominant 4-hour bearish candle, and it's about 1,300 pips. So it's a huge candle for a 4-hour chart, even for a daily or weekly. Obviously, that's a big candle. So I like to keep the fib on this one. I think it's the clearest point of reference for us technical traders, because it kind of it's let's say what then it calls the master dominant candle. I don't think a break of that high will happen. Actually, if anything, we see that the 50 fib was respected. So if price does make a bigger correction, then the max I would expect price to get to, the next level of resistance should be the 61.8 fib at 140.60. All right. So that is basically the last point that I would expect price to turn around. If it gets that high, all right, it could turn earlier. I would expect potential barriers to be 135, 137.50, and 139 here. All of these 4 fibs, I would expect actually still to be turning spots. The target of that big fib has not been hit. That's the minus 272 target at 128.60. So what I'm expecting, you see some small bullish candles. We could see just a mild correction, I would say. That's what I was hinting at yesterday in my weekly video is that we could see maybe some consolidation before we see yet one more move. I would think one more downside, one more lower low at the 272 target seems, I would say, a very high likelihood. It would be difficult for me not to imagine that, but you never know, especially with the current financial political context. You really never know, I guess. But I think the continuation of bearishness seems pretty likely at this point. Now, considering the big moves that we've seen, considering the big volatility, this could be a big move. Anywhere from 137.50 or 135 down to 128.60. You're easily talking about 600 or 800 pips. All right, so from that point of view, there's a lot of potential volatility movement that could happen still. Now, does that basically, I will be keeping an eye on Fibonacci patterns on lower time frames, maybe 1 hour, candlestick patterns on lower time frames at these key levels to see if it's worth trading, to see if it's indeed making that turn back down. Now, from a longer perspective, what I would expect is price to hit this fib, move down to the target, bounce off that target, and then make one more lower low. I think that two more lower lows seems likely, considering the momentum of, we don't have maybe that at this moment. Let me put on the escalator. Excuse me. All right. So considering the momentum, which I guess you don't see that much here, but maybe here you can see that a bit better. If we squeeze it, you can see the momentum, how low it is actually compared to historical oscillator readings that are more up in here. So just to give you the contrast. With such momentum, it is very, very typical for price to show double divergence at the very minimum before we might see a big retracement or perhaps even the end of the downside. All right, so I think two more lower lows after yesterday's lower low is quite likely. One of them could be the push to the 272 target, a bounce, and then the next could be the continuation down to the minus 61.8 target at one close to below 125. Now 125 is a psychological level. That's something we need to be aware of. 132, by the way. 125 is a Fibonacci target of a higher time frame as well, by the way. So, will it get exactly to this minus 61.8 target? I wouldn't necessarily hold my breath for that. You want to be careful with 125. Also, is if we look at, obviously the end of June is coming near. This week, Thursday, I think, is the last day of trading in June, which means that we're going to have a new monthly candle and a new weekly candle. So keep in mind that this monthly candle is going to be ending within a couple of days. How it closes is going to give us some interesting information, I think, because if it closes anything like this, obviously if there's a big wick, then the bears were not able to hold this month, and the continuation next month of downside seems shaky, actually, and this does not necessarily have to happen if the close is very far from the low. If the close is anything like this, within 30% of the low, then I think that we will see that break that I talked about to the minus 61.8 target. We'll probably see it next month. Probably what will happen is that we'll get retracement and continuation this week. We'll see June probably ending up somewhere here, the monthly candle. I would expect bearish close of this month. And then next month, we might see a small retracement of this month, and then a continuation next month to the downside and a break of this month's low. All right, so let me do that again. Might be a bit confusing. So up, down, bounce. That could happen all this week. We close somewhere here. Next month, we see an ABC kind of continuation to retrace part of that monthly candle. All right, like this. Because the month was bearish, I do expect that the upside will be retracement. We should see a turnaround, and we should see a fall down one more time to the minus 61.8. That will create some divergence after that, who knows? That could be the cause for completion of the downtrend, or maybe we just see a retracement, we just see a triangle. Well, if we see a triangle, then there could be one more push. We don't know. We have to see. That's too far to talk about, right? Doesn't make sense. We have to see how many, if this first of all happens, and how it happens, how price looks like, etc. If, however, at that point at the minus 61.8 target, we see something like this, well, maybe that's a bit a lot, but maybe if we see a strong rally to at least 130, 132, and then we see a triangle like that, those are then would be a signal that the market is maybe going to make a bigger reversal. All right, so that's my perspective on this monthly candle. We are near 30-year lows, or below it actually. So the thing is that we're kind of in very new territory, and that's always a bit difficult. We don't have really historical levels of support and resistance to work with, which makes it always a bit more difficult to trade. And that makes it complicated to find where support levels could be. So we have to specifically work with, I guess, psychological levels like a 125, which is a quarter level, fib levels, fib targets, etc. If we zoom into lower time frames, we basically get a feel for the potential vibe here that we see on this 1 hour chart. Like, I would expect this to be a potential 5 wave, which means that I don't expect price to go above this wave 1. And let's zoom into this upside. Wei is saying that it seems to be a 5 wave move up on the 50-minute chart. Yes, this could be a wave 1, this could be a wave 2, this could be a wave 3, this could be wave 4, and we're going up for a wave 5 perhaps indeed. So most likely target, if we put a fib on wave 3, we can see a bounce off the 38.2 fib, 133.80, 134.50 could be targets. Indeed, great job, Wei. This could be a wave C, which means that this could be the final push before we turn. And from that perspective, closing the gap is possible, definitely. But doesn't have to be. I don't think it's. I'm not a specific. Myself, I'm not a gap trader, so I don't have any, let's say, strategy that would try to capture a gap. I'm not as specifically focused on gaps, so maybe I am downplaying its relevance. But I have the feeling that maybe specifically by tomorrow, eventually the gap becomes less and less important. It is, of course, great confluence for resistance if price does get there, right? Because that could be then the turning spot for downside. But otherwise, I've seen gaps not filled. I think that we are at a low spot that this gap will eventually get filled. I don't think that the pound will be not able to get back to 135 somewhere in the future. I don't think, in my humble opinion, it necessarily has to be filled, immediately now. I think it could continue lower without necessarily getting up there. But if it does get up there, I think it's an extra confluence as a resistance. All right, so there are a lot of fibs on here, but let me get rid of this one quickly. All right. There we go. So, yeah, how much can this push up go, and what will I be looking for? So I think it would be good to see price make it up to at least 135, I would say, before looking for downside. That that would be the best. But if price doesn't get there and breaks the support, that could be another way of trading it to the downside. In that case, I would need to see probably price break at least below 132 here. 132, what is it, 50? Yeah, 132, 132.50. A good candle, a good hourly candle pushing like that through it could indicate the breakout to the downside as well, and a continuation down to the minus 272 target. If we don't break but bounce here and start to show some bullish candles, then I think 135 could be a turning spot. Any bearish candlestick pattern there, some big wick, like a pin bar for instance, or two bearish candles at the 135 could signal the turnaround, or the break of this trend line yet again, but later on at a higher spot. Z10 is asking why I expect two bounces, because basically, well, Elliott wave, it's can be explained by Elliott wave. It's not something I had in mind, but yes, indeed, it could be. Wave 4s and 5s, typically, when you're finishing, this is momentum, so that's typically wave 3. So what you often get is a wave 3 of 3. So you would have a wave 4, then a 5 to finish a 3 of a higher degree, and you get a 4 and a 5 to finish again a wave 3. So that's why you typically see a big momentum burst, and then you see this often, because of wave 4s and 5s indeed. So that's one thing. But specifically what I had in mind was just related to Fibonacci levels. In fact, the targets often are bouncing spots, and so therefore I expected price to make a bounce, go back to resistance, and find one more leg down to the next target. Typically, minus 61.8 is the main target to look for in most cases. So considering the momentum, considering the 50 fib, yeah, I think that if we just use our standard kind of fib approach, that should be our main focus for the moment, unless we see evidence of the opposite or contrary. I think that as fib traders, that's what we can aim for, which seems like difficult to imagine, maybe because of the historical, low and the gigantic moves we've seen. But setting that aside, like a standard kind of approach would be the minus 61.8 with expecting a bounce at the 272 target. Now, if price would have gone deeper to these fibs, then we would be aiming for this fib. But the 50 fib standard target is the minus 61.8, but you would want to be careful of a bounce at the intermediate target. Things that could change, the environment could be engulfing daily twins. Then you might see a bigger retracement to the upside. So you want to be careful of that, especially if the close is near the high. I'm just giving you kind of, let's say, tools to understand when the downside might be shaky, might be not so set up, not so well. I don't necessarily expect it to happen considering the momentum, but you still want to be on guard. Regarding the euro dollar, we saw a bounce at the 78.6 fib. Slow upside. I'm not even sure if it's going to get up to 112.50. That's where I was aiming for. I was hoping for a turn at these fib levels in yesterday's video. We'll have to see if price has enough kind of momentum today to reach that. It's 200 pips higher. Plus, we bounced basically at the 78.6 fib. That shows weakness as well. Yesterday we were at the 50 or somewhere at the 61.8, I think. So that's a lot of terrain it has to push up before we get to that confluence of resistance. I do think that if it gets there, it's a great decision spot to find a turnaround. But I'm not sure if it's going to get there. So from that perspective, this trend line could be important as a breakout to the downside. Let's take a look at lower time frames. And you have to understand that although these movements seem small, that's just like a 60 pip upside. So we're seeing a vast different landscape. Whereas typically, the Asian session on the euro dollar might move 20 pips, you're seeing what are relatively small moves still being big moves, right? Bounce off the 78.6 fib has gone up 100 pips throughout the Asian session. Just because everything is now bigger in scale, even the smaller moves are quite big actually. So that's something that inherently at this moment creates more risk. Stop losses are bigger. So, be careful with your lot sizes and stuff like that. You might want to think about using risk percentage if you're using fixed lot sizes, just because otherwise the risk would be a lot more than you're usually used to. Now, other than that, from a fib perspective, I don't see anything else than waiting for a turn here or a breakout, very simply put. But let me take a look at where the pivots are for today. All right, pivot points. Main pivot on the euro dollar is 110.40. Price is now just a bit above that. So what would be good probably is a break below that pivot. Down to the M2, 110.20. Let's see. One 111.10, sorry, is R1. That could be the best one actually. Might not even get that high. So it could be good to even look at a turnaround at the R1 for a move back down. It could be a wedge like this that's created. So besides 112.50, which seems very far, 111 itself could be an interesting turning spot. For a breakout, I would need to see price probably break to 109.60. Break to 109.60, retrace preferably back to 110, and then see downside. All right, that's what I would like to see for a breakout to the downside. So bounce at 111 or a break to 109.50, 109.60, push back to close to 110, excuse me, and then a continuation down to 109 for today could be a realistic target. On a higher time frame, we see a breakout of this channel. We see a break of this uptrend with the green lines. Now 108 is still very important. So if we do get a break of 110, 108 is the swing target. Maybe not today's target, but the long term, or let's say this week's final level to think about. 108 is a strong support level, so that could be a bouncing spot. If 108 breaks, then we get more confirmation of a downtrend continuation. This was a big momentum. This looks like a three-wave consolidation, flat or sideways move. This break could basically indicate the first moment that price might continue with that downtrend. But it's still early to say, I think, yes, we do have a break of trend lines, but don't underestimate horizontal support, especially 108. But if 108 breaks, then we still have the bottom. If that breaks, then the euro dollar is in a very high likely chance of a downtrend continuation down to parity and, well, maybe even lower. We'll have to see. All right, but first 108, that's a key level as well. So for the moment, yes, we are in breakout territory, but we've got a good chance of a downtrend, but it's not a guaranteed thing. Don't forget that this big consolidation zone, those zones do not always break neatly. There could be a larger consolidation zone than we imagined, and that already actually happened in the sense that it's already end of June. I thought that this consolidation zone would break somewhere in April and May, but the Fed didn't raise its rates as expected. I think that a raise hike would have probably sent this consolidation, would have completed the consolidation. We didn't get a rate hike due to many factors, probably, among others, maybe this Brexit, right? Because the Fed also said that was in the back of their mind, but some other things too, like not a very fast US economy at this point, slower than maybe expected at the end of last year. So all these factors changed kind of the outlook that I had like in fall last year when I expected a break in April, May. It didn't happen. We do have a break now in June, end of June, but will we get follow through? That's something we have to see. All right. So dollar yen bounced, made basically the dash from the 38.2 fib, bounced at the 38, didn't break this resistance, then pushed below it and fell down to the 50 fib. Kind of made a volatility push below it, but it's still respecting it and respecting the 100 level. So would this be a bouncing spot, a long-term bouncing spot, halfway the gigantic uptrend we had from 75 to 125 over years and years and years? And would this be the halfway kind of retracement for further continuation of that, or has the market environment changed so much that we see a push through the 61.8 and perhaps later even down to the 78.6 fib? Difficult to imagine when considering the huge move up, but that's where we're at the moment, and I don't think that going to the 61.8 is that strange. I would definitely expect to bounce at the 50 or 61.8. It's difficult for me to imagine that it would just continue straight down to the 78.6 fib. I do expect a bigger bounce at one of these two fibs. Now, how can we basically trade such a bounce? At the moment, it is difficult to trade, I think, considering the momentum to the downside, wick, and just candles going sideways. So I don't think it's really that tradable at this point. I think that what I would like to see before I trade it to the upside is either a clear five-wave pattern on the hourly chart, for instance, like this, and then an ABC correction down, and then I'll be trying to trade at the end of wave C, the completion of wave C in combination with some fib retracement there for upside. What I, in that case, would do is basically put two fibs on. I would put, when we finish a five wave like this, I would put a fib on the bottom and top on those five waves. And when we have an ABC, I would put a fib on the A part. And in that case, we get Fibonacci targets to the downside, and we get retracements from the upside, and we get confluence. And here I would be looking for buys to the upside. That basically would indicate that price is bouncing off the 50 fib. We would see something like this happen. And then we would see the ABC that should go deep, because this is either a wave 1 or A. This is either a 2 or B. After which we should see then a 3 or C continue. And this is the ideal spot to look for longs. Considering the 50 fib bounce, but not too soon, not too late. Good R2R, that is the ideal spot to trade it to the upside with most confirmation and best R2R. That would be the absolute best spot. So keep an eye. I'm keeping a very close eye if we're getting five waves up. If we don't get five waves up, and we get three waves up, and price basically makes an ABC correction like this, then starts to drastically fall like that, and then we get a triangle, I'm bearish. I'm looking for continuation down to that 61.8 fib. Because in that case, this is not looking like a reversal pattern. This is not looking like we're going to see a larger push up. And then I'm bearish, and I want to see a continuation, a break of that pattern, and a follow through to the next fib. So I'm on hold, but I think now you can see what I'm looking for. We can monitor this as it goes along. If you're not sure what is five waves, then Keep an eye on perhaps my wave analysis. Here, for instance, you can take a look at analytics, go to wave analysis, and you can see what I'm thinking about for the majors, euro, dollar, pound, dollar, dollar, yen. So you can see if I think it is a 5-wave day by day at least. Or just write me an email or tweet and I'll give you my 2 cents on that. All right. Where is the Bank of Japan? Yeah, good question. Seems like they disappeared. I think they're still happy maybe with what the rate is at. Of course, it is a big hit from all the way 125 down to 100, but perhaps 125 was just an extra, let's say an extra cushion. Perhaps it was just a bit above what they thought was desirable, or not, maybe not desirable, but what was the minimum, let's say. So 125 was great, but maybe 100 is still enough for them. Maybe they've grown a bit leery of interventions. Difficult to say. It's a good question. I don't have the exact answer to that, but you never know. They could always step in if it does. That's why I would be very cautious of the 61.8. I can hardly imagine that there would not be a bounce at one of these 2 fibs. Maybe also because of that, actually, the Bank of Japan may be stepping in to kind of stop that momentum, that bearish momentum from proceeding, because once it gets below 95, we get a big gap until 86, and that, we might get into price territory that is not so comfortable for Japan and the Bank of Japan. So I think that could be a watershed moment, the 61.8. Once it breaks that, there's a pretty big gap. Alrighty. Aussie. Yesterday I was talking about a bounce at the 78.6 confluence with this trend line, and price actually dipped a bit below that, down to the 88.6 fib. Some of you might have already known that the 88.6 fib could have been a bit better once this candle closed. Perhaps you remember in one of our webinars with Nennet that we talked about how important it is to look at candle closes and momentum when price is approaching support or resistance. When a candle is strong and it closes near the low like this, where I have a blue circle and green circle, right? Then the likelihood of support stopping such a momentum candle is small. And you can see indeed that candle was too strong to immediately stop, and price actually reverted and paused at the next fib. But anyhow, the difference is small. It's only about 20 pips difference. The stop loss needed to be below this bottom anyhow. So perhaps you're in that trade. If you are, I think it's okay to put the stop loss below this bottom, or even at break even, in fact, and see if it can get up to the target at 75.65. The Aussie might move up more than the euro and pound, as the pound and euro maybe make corrections to the upside. The Aussie can push up higher because it is still an uptrend channel. Look at these trend lines. So there could be a bit more momentum, and the Aussie could push further than the others. The Aussie, in fact, had a downside of 300 pips, which was the least. Obviously, Aussie is affected by commodities, and of course, the dollar was strengthening because of the Brexit. But it was not as impacted as much as the euro and pound because it's just less directly affected by this let's say political process, right? So, but it is affected by the commodity market, right? Because the commodities are like oil are having a tough time. Let's take a look at that. I think that is important to get a bit of a context of what's going on here. All right, let's use a new sheet quickly. All right. So we had a wick, 2 bearish candles, and the downside was from 51 to 47. Not huge. And we see some bearish momentum, but technically that is something we expected already. In fact, I mean, price was at the minus 61.8 target. As you can see, this is a classical example of such a zigzag that I talked about when you look at 5 waves up, and for instance, or down, right, and 3 waves correction. The zigzag here typically goes to the minus 61.8 target. This is a very good example of a bullish zigzag where price is bouncing off fib retracement levels right up to the target. So from a technical point of view, we already knew that that would be a resistance spot, price making some downside, but not a whole bunch. If this month does end up bearish though, like this, that could be a pin bar. We might see price re-challenging this bottom yet again, but I don't think it will break. That bottom will not break, I think. We got 1, 2, 3, 4, 5 months. All right, it's still hanging in the air, but if this turns bearish, then I would expect a challenge to this bottom. It will depend. Will price break the bottom next month or not? If it doesn't, then I don't think this bottom will break, and we could see just a correction like this, and maybe some prolonged consolidation like that. All right, gold made an upside throughout the last few days. And that does not come as a surprise. I think we talked about it last week too. Let's see. Let's put a fib on this part. We see 23.6 fib. We hit the target. And next target could be 1400. Well, any candle like this, I think, would have a bit of wick, but that is not endangering the upside. I think we could see maybe a retracement of this month's candle next month to maybe the 50 fib, 1286. We have highs and closes and opens here. That could be a good confluence for a push up to 1400. That's what I'd be expecting in the near term. I mean, from a technical point of view, we got a clear break of this trend line. We got bullish candles, so we're basically in a bullish momentum to the upside. All right. Stock indices, double top, bit downside on the S&P 500, but we're still in this consolidation zone, in fact. FTSE looking almost like an inverted head and shoulders here. Right, the bearishness not that much, in fact, for the FTSE at least, as I would expect. There was downside, of course, throughout those days, but still basically all in all going sideways. So we have to see if it breaks above this resistance, or if it actually fails and breaks these lows. All right, back to our Forex market. Let's take a look at some other pairs like the Euro Yen. Let's take a look at zigzags now. Let's take a look more at technicals instead. And Fibonacci instead, excuse me. There we go. It's a bit different or difficult perhaps with today's market because the moves are so big. But a clear zigzag could be on the Euro Yen, for instance, on this leg, right? We got a clear push up. $61.8 fib. So, a zigzag would be basically trading it at the targets or trading it up to those targets. Now, we don't know if this is going to be a zigzag, but it sure does look like it has the structure for that. We have basically momentum like this, down and up. And that's probably the ideal situation for this to happen. So, I'll be keeping an eye on, preferably I like to trade zigzags at targets for a downtrend continuation. So keeping an eye on these targets I think could be very useful for further downside. By the way, this mini terminal is part of a MetaTrader 4 Supreme Edition package, and that has 60 extra features. So if you don't know what MetaTrader 4 Supreme Edition is, take a look at admiralmarkets.com, then go to platforms, click on MT4 Supreme Edition. There are extra features, 60 of them, that are very useful for trading, like this risk and money management, but alarm managers as well, correlation matrices. I'll show you right here. Market manager, tick chart trader, session map. Those are just a few of a long lineup of extra features that the MetaTrader 4 Supreme Edition has. And order history, mini charts, high lows, candle countdowns, Renkos, there are a ton of things. Now, one of the reasons that Admiral Markets actually won the best the best broker award for MT4 in the UK last year was part of the reason was technology. So, and this MT4 Supreme Edition plus the web trader, so you can trade basically from your browser. All right. So this is, if you like Renkos, that could be a way of looking at it. All right. So regarding the pound yen, though, I would say that this is not much of a zigzag because it's more of a double bottom, perhaps, but not much of a zigzag. Price tumbling from 160 down to 135, a huge move. You can imagine the pound yen is already such a big mover. So Thursday even made it more so, 2,500 pips within a couple of hours to the downside. Massive amount, just totally crushing to the downside. And well, basically, yeah, it's quite intense, right? I mean, this is not something you want to mess around with. Just to move up to the 38.2 fib, for instance, a rebound back to that fib is a move of 1,000 pips within a few hours. So it is quite amazing. Any of these fibs could be turning spots, but I don't know how it's tradable. I mean, this is really almost too big to trade. But I think the euro yen is just maybe one of the better examples of a zigzag that could unfold. Let's take a look maybe at some other examples in the past, so I can show you a clear-cut version of that, so you have a better idea what I'm talking about with fibs and zigzags specifically. For instance, and zigzags, I mean corrections. So we're looking with zigzags for the end of those corrections, preferably, or trading them even, so that we can continue trading with the trend. All right. Let's see if I can find one here, for instance. Put a fib from here to here, right? And we see price stopping at the 61.8 target. And that, it's just a very neat moment to trade with the trend. We see trend line, we see broken bottom. So there's some other things that add confidence. We see a downtrend, of course, and a target like that is then often a good spot to seek a continuation of that. So that's what I mean with trading the zigzags. Here or here, we're also at targets, as you can see. Here too, minus 61.8 turn. All right, those are examples of turnarounds at the targets. So that's what I'm looking for today specifically. Now we have one on the euro yen. We might have one on the euro dollar, right? If it gets up to this confluence of 112.50, but we retrace deeper. So I don't expect the minus 61.8 target because of the deep fib. I would expect price to go to the shallow target and the 61.8 fib. And that would be then the level I'm looking for a turnaround. But let's see, it could turn out earlier, as I said, 111 could also be the turning spot. Let's see if there are any other zigzags that might make sense. We already looked at the majors, so let's take a look at, for instance, this Kiwi. No zigzag there, and zigzags could occur on all kind of time frames. It doesn't have to be the hourly. I'm looking now more at the hourly for zigzags, but they could easily appear on a 50-minute chart too, 4-hour chart as well. In fact, maybe this pound odd has it. Trading to pound to the upside is not something I think is a favorable idea for this moment, but it could get up to the 61.8 target. But if it does, I think that could be a good turning spot, for instance. Oh, sorry, I just deleted my own pound odd. Let me get that back quickly. All right, let's take a look where the target is. 61.8 target right there. You have to realize that sometimes price extends further than that. Sometimes it goes to a minus 1,000 target. So waiting for a bit of confirmation before trading it at the target is always good because you never know how far price can push. 61.8 target is strong, but not like always invincible, right? It could push higher than that. In this case, we see extra confidence with a 23.6 fib. So 182 seems to be a strong resistance spot indeed for the pound odd. It will close the gap as well, by the way. 182 seems like a good spot, but just realize that 61.8 target is strong, but it sometimes price, if there's big momentum, can push to higher targets as well. Scott helped us here saying, New Zealand might have a zigzag. So let's take a look at that. Oh, wrong template. Sorry about that. There we go. Well, I'm not sure which time frame are you looking at, Scott, because this looks quite. This is a consolidation. This is at this moment it's correcting sideways. So typically zigzags are corrections too, but I would be looking for basically more momentum to be able to trade that. You could say that this maybe, right? This could be a zigzag, this upside part of it, and we had an 88.6 fib bounce. Target would be minus 272 target. So yeah, if it does get up to 105.80, I think that could be indeed a good turning spot. That's true, but I'm not sure if that's the one you meant. All right. Let's see if there's anything else. Euro New Zealand actually minus 272 target. So if it gets up to the minus 61.8, 158.25, that could be an interesting level to look for a turnaround. But it might not get up that high, and the difference between that, the difference between price basically continuing its downtrend from the 272 target or getting up to the 61.8 is sometimes a trend like this or breaking support. Both could be interesting for downside. All right. Well, any questions? Any pairs you might want to like to take a look at? Otherwise, I think the Euro Yen basically has a good potential zigzag, and I think could be a good turning around at the target. Euro dollar too, talked about it, the breakout or turn at resistance. Pound USD, once again, I would be looking for turns at these fib levels. Stop loss, I think, should be, depends like how the trade is taken. If I'm trading the 38.2 fib, I would probably just wait for a candlestick pattern to put the stop loss above it. Now, if price were to get up higher, I might even think about a stop loss just above the 61.8, like 141.30. Dollar yen waiting for five waves and then a 3-wave correction. Euro dollar, pound dollar looking for downside. Aussie looking for a continuation upside. I already said yesterday I would be interested in going along here, so maybe some of you are in that trade too. If you're not, then I think the only way to trade it would be to wait for a hook back here, maybe down to 74.60, stop loss below this bottom, target at 75.65. And otherwise, Euro New Zealand, we had a zigzag, and I think we said pound odd. And that's about it, I guess, for today. Those are the zigzags that I'm interested in. Those are the levels that I think could be good to trade. Now, not every pair will have a zigzag necessarily. Some will just continue with their trends without necessarily going up to that target. But if they do go to target, then I think that those pairs that I just mentioned are interesting. So I'll be keeping an eye on those. If you're interested in joining more webinars this week, we got tomorrow. We're going to take a look at pattern trading and strategy session. Neda is going to take a look at momentum trading, and then Thursday we're going to actually take a look at more fibs, part 2, in how to use fibs. If Fibonacci Advanced Part 2, using using fibs for targets, entries, and exits. So I hope to see you in those webinars. If you have questions, let me know through email or Twitter. You can find our Twitter handle here. There we go. So hope to hear from you, and wish you all a great day, folks. Talk to you soon. Cheers.